Friday, April 25th, 1:53 p.m. New York time. Welcome back, investors, to Winning Wall Street's Money. We're in the afternoon, getting ready to complete the last trading day of the week. Very close to the end of the month. Video is going to go over the high-tech stocks, companies in the Magnificent Seven. If you're not familiar with the Magnificent Seven, it currently has 7 companies listed in it, all United States publicly traded companies. Yep, these are 7 United States publicly traded companies. There was another name they used to go by called FANG. And then after FANG, they went to FANG Plus. So it's not the same companies from the start. Nope. On the left, I have a watch list. All it does is tell you from the opening price to right now. So if it's red, that means it's trading lower than the opening price of today. Vice versa. If it's green, it means its opening price, it's higher than it was from opening. Doesn't tell you anything bigger than that. That being said, these 7 companies make up a large percentage of the US stock indexes, the weighted average. They're not in every stock index. They're in a few. So here above it is the major United States stock indexes. There's more than I'm showing here, but these are the major ones I'm showing. The top one, look green. The second from the top, green. And the bottom one, green. So the top one is the S&P 500. All these companies, Magnificent 7, are inside the S&P 500. 500 United States publicly traded companies. Below that is the NASDAQ 100. All these companies are inside that. Yep. And also, the NASDAQ 100 is inside the SPX, S&P 500. The S&P 500 stock index has several indexes in it. And then the third one from the top, Dow Jones Industrial Average. Look, it's red. It's lower than from its open. Several of these companies are inside that index. Stock indexes. The NASDAQ 100 is heavily weighted towards technology companies, where the SPX is very diversified. It has 11 sectors. And the Dow Jones Industrial Average, diversified, has several sectors. These are the 11 sectors in the S&P 500. Again, different sectors, one of them being technology, one of them being real estate. Yep, mixed green and red. So again, much more broader markets in the 11 sectors and the S&P 500, much more broader. Well, the S&P 500 is green because the largest weighted average companies in the index are these. So it's not representing very well the broad market, which is these 11 sectors. This is the NASDAQ 100 I just mentioned. Looking at 3 charts, the far right, monthly, will be done in a few more trading days. The middle, the weekly, be done at 4 p.m. today. And the left, the daily, be done again, 4 p.m. today. So the far right, 5 years of history. Here's the high of the year, that yellow horizontal line. And this month, the NASDAQ 100 made a new low for the year. Also for the month, made a lower high. So since the start of this year, the NASDAQ 100 on the monthly chart has been making lower highs and lower lows. Or compare that with the other companies, Magnificent 7, or maybe another one bonus, see if they're performing equal or better. So right now, this is terrible. In the middle chart, again, yellow horizontal line on the top is the high of the year, and the bottom yellow horizontal line, the low of the year. So you notice all this sell-off here? I'll show you. Let's stay in this. We have a consolidation here. See this big red candle? That big wick, till, shadow on top? Nope. We haven't taken that out nor close above it. All we have is a consolidation. Consolidation. Yes, wider trading range. Again, this was a consolidation. And look what happened after. pumped it up one more time, and dump. On the left, the daily chart. Look at the high on the top left, the high of the year. And the bottom right, the low of the year. This is a gap that occurred a few days ago. Simply means prices opened higher. This is a gap up. They opened higher than where they closed the prior day. And these are swing points I have labeled here. These purple horizontal lines, and same in the bottom one. Potential targets on the upside, where here, these two on the left, top left, these swing points were highs that had dumped after. And the bottom, vice versa. So again, potential more sellers at these areas. And let's look at this. The NASDAQ 100 watch list, top left, it's higher than where it opened. Look at the Magnificent Seven. Most of them are, other than Apple. So I'm about to go on these companies alphabetical order, but again, on the watch list, it's showing you Apple's the weakest. That's not necessarily true on the higher time frame. And we'll do alphabetical order. So again, this would be three grids: the far right, 5-year monthly; the middle, 1-year weekly; and the left, 3-month daily. Apple, the first one. Yeah. So look at this on the top far right. The high was last year. The all-time high of Apple was last year. It's underperforming the NASDAQ 100. And look at Apple also made a new low for the year. Underperforming the NASDAQ 100. So again, you'd be better off investing in the broader stock index of the NASDAQ 100 than Apple. The middle chart, Apple, weekly, lower high, lower low. Yeah, it's green candle, still trading below the high of last week, and it also broke the low of last week. Disappointing. And look at this on the daily chart. Small trading range up here the last few days shows less confidence of buyers stepping in. Lots of gaps all over the place, very sloppy. Yep. That's just one company so far that have confirmed. Let's go on to the next. Amazon. Far right. This year made the high. And current month, low, new low for the year. Trending down, terrible. This orange vertical line is when Amazon got added to the Dow Jones Industrial Average. I have other videos showing all the stocks in the Dow Jones and which ones are performing better or worse than the Dow Jones. Give you a hint. It's on my YouTube channel. It's free. Middle chart, Amazon. Here's a high of the year. Here's the low of the year. Look at this huge consolidation. Still trading below this key level. And big wicks of where sellers are. Again, the left, you have all these gaps that occurred on Amazon. And look at this daily chart, forming a little dodgy candle. Means one of two things. Means either a halfway point or a reversal. We won't know till that gets done, if it's going to be a dodgy at the end of the day, and how the next trend goes. But again, if it keeps doing this, that would be what? Distribution occurring, smart money selling. They're pumping it up on lower volume. That'd be a trade idea after the market closes, 4 p.m., because you could continue trading stock indexes to 415. And again, you know what stock index is. This one's in. Trade ideas, same with options. You trade them up to 415, the indexes. All right, that was Amazon. On to Google. Same thing. Made a high for this year and new low for the year on the monthly. The middle chart, yep. Look at this huge trading range for the week. It's engulfing the prior week. Let's see if it closes this week at 4 p.m. That's forming what? A bullish engulfing candle. And the left, we gapped up this morning and near the lows of the day. Boy, that's not looking good. Nope. On to the next. Meta. Monthly on the far right, new low for the year, lower lows, lower highs. Meta on the weekly chart in the middle, huge consolidation. Very disappointing down here. Yep. Also, again, new low for the year and lower high. And daily chart. Yeah, they gapped it up and it's red already, selling off. Makes sense. Pump it up in the morning and it's selling off in the afternoon. Microsoft. Look at the top chart in the far right. The high of last year. See that yellow horizontal line? That was the high of last year. The all-time high, Microsoft. We haven't even made an all-time high this year. Nope, but we made a new low for this year. So it's underperforming the NASDAQ 100. Terrible. And the middle chart weekly. Lower low, lower highs. And the daily chart. Yep. They pumped it up. Small trading range. Disappointing. Again, the higher time frame clearly tells you it's one of the worst ones. NVIDIA or NVIDIA. That orange vertical line is when it got added to the Dow Jones Industrial Average. Let's go look at the index right now. There we go. Apple's green here now on the daily. Easy to fool people. I just showed you on the chart. It's performing worse than last year. Charts don't lie. It's more than just looking at watch lists. It's more than just watching the news. Middle chart, NVIDIA. Yep, green, lower low, lower high. Huge consolidation building here. And the daily chart, again, getting pumped up. Tesla. The high was last year. It's terrible. It's worse than the index. Made a new low for the month. Terrible. Middle chart weekly, huge engulfing candle. Bullish engulfing. And the daily chart, huge move up. Well, obviously what? We know earnings occurred. See these red circles and light bulbs down here? Again, they tell me the event of earnings. Another one. So it's not part of Magnificent Seven, but I mentioned, if you heard me, Fang and Fang Plus. Netflix used to be part of Fang, which again changed over to being Magnificent Seven. Well, on the far right, Netflix made an all-time new high. All-time new high. Outstanding. The middle chart weekly, again, huge trading range, breaking above the high earlier this year. Huge move up. It's performing better than the NASDAQ 100. Outstanding. And the left chart, the daily, all-time new high, right there. Today, all-time new high. It's performing better than the Magnificent Seven. It's performing better than the NASDAQ 100. So let's put this for the NASDAQ 100, just to show you on the comparison on the daily, on the weekly. So same thing, we'll put it for 1 year weekly. In the far right charts, the NASDAQ 100 which the Magnificent Seven are in here, plus Netflix is in here. So see this way near the lows of the year. NASDAQ 100 as most of the Magnificent Seven I showed you. First, Netflix all-time new high, outstanding. Money, investment capital in these Magnificent Sevens, and I'm going to actually put it higher on the weekly, because again, we're almost at the done of the week, so I'll put it on the weekly. These are the U.S. stock indexes, weekly chart, and they'll be done at 4 p.m. And you can still trade them to 4:15 as well as the equity options because they're indexes. The calculations take a little bit longer. Notice all of them, the top three, S&P 100, S&P 500, NASDAQ 100, and Dow Jones Industrial Average, the top three, all below the highs of the year. I showed you Netflix is performing better than the stock indexes. And there's other companies performing better. They're the Magnificent Seven. Okay, look at these stock indexes. Another thing to share with you, if you're only looking at fundamentals, if you don't look at charts, or if you include charts and fundamentals, a lot of these software companies are not necessarily making physical products. So tariffs would have less impact on them if their physical products are not included in a tariff. Well, a lot of these companies make bulk of their money from advertisement. Businesses will reduce their advertisement, especially if they have reduced product or less demand. So they all have an impact from the policies of the executive branch and the team of the executive branch of the United States decisions. Thank you as always, spending just a little time with me. That's it for the video. Thank you for watching.